Hey friends, thanks for joining me, Jim Baroud, to hear a few insights from leaders who represent our innovation ecosystem. Today's chat is with David Horowitz, the founder and CEO of Touchdown Ventures and the inventor of the new board game, Frequent Flyer.
Hey, well, thank you so much for having me. It's really great to be here. Great to be spending time with you. Yeah, I'll go right into my background. I went to University of Michigan, greatest public school, all schools in the country. Great sports program. At a very early point in my career, after a short stint in investment banking, I actually moved to the Philadelphia area. So I live in the kind of South Jersey part of Philadelphia. And I actually was one of the folks who helped start Comcast's venture capital group. So Comcast was one of the first, really what I would call non-technology companies, non-Silicon Valley certainly based companies, a Philadelphia-based company, to really get into and launch corporate venture, technology investing. It was really amazing. Every new business product innovation that Comcast created probably emanated its way from this, corporate venture fund. Usually, it was either companies that we had, sourced or found or most likely even invested in. And so I kind of realized over that, I was there for almost 15 years, and I realized how critical a corporate venture fund was to really harness and access innovation for a big corporation. And so about 7 years ago now, I can't believe it's been that long, myself and two other co-founders started Touchdown Ventures. And the idea that we had, one of them also worked with me at Comcast, was can we take this Comcast Ventures model that works so well, can we bring it to other corporations? So we basically pioneered this idea of third-party corporate venture capital management as we saw more and more corporations getting into this. And the model has been very successful. So today, Touchdown manages over 15 corporate venture funds, which is a lot, all different sectors of the economy, some really great corporate brands that you would have heard of, like Kellogg's, T-Mobile US, ScottsMiracleGro, which is a big player in the agricultural space, and a bunch of other companies. You may not be familiar with the name, but they're like Masco is a company that owns Delta Faucet and Behr Paint, or Allegion's a company that owns the Schlage lock brand, and a number of other corporations that we work with. We have almost, I think, over 45 people at Touchdown, and we're growing, we're hiring. So that's a good call out here. Always looking to meet and connect with new people to grow the team, and looking to grow the firm as well. So, we'll continue to add new corporations to the platform if we feel like they're, a good fit and have the interest in corporate venture and innovation. And as I said, I'm in the Philadelphia area, but we also have offices in San Francisco and LA. So and that's been since the beginning. So we're really a bi-coastal venture capital firm.
That's great. And I know we spoke early on when you got started, and
Yeah.
The growth has been dramatic, and I'm super impressed with your success. But for those people who don't know that much about corporate venture capital, can you explain what that is and how your model works with it?
Yeah, I'll start with the corporate venture, and then I could talk about the Touchdown model. So corporate venture, think about it as the corporation, typically from their balance sheet or from their surplus funds, taking a set of capital and saying, we're going to invest in startup companies, just like any VC, but instead the money coming from the corporation. And I would say the big difference is that process of organizing and sourcing those opportunities and finding those startups. A pure financial VC would do that and go make investments, but there might be a lot of value that you get even from not investing. There might be partnerships or relationships. There's, I think, a lot of value, which I'm sure we'll talk about on this talk, about the startups can get from engaging with these corporations. But I think that the key message is, don't think of this really any differently than another VC, but think of it as a VC plus. So having that corporate relationship, maybe industry expertise, bringing more than just capital to the table. What our model is at Touchdown is, we are helping to manage a lot of these at scale, which is why we have a big team. We manage these separately. So when I talked about the Kellogg's or T-Mobile or ScottsMiracleGro, and the other ones I mentioned, those are all separately managed venture funds. We're actually working with the people within those corporations. So they have a set of executives that are working closely with us. They don't necessarily oftentimes have a lot of VC experience, to how to find and evaluate companies. That's really a big part of what kind of Touchdown brings to the table in a partnership. So that's a little bit about how our model, works with these corporations. And we kind of pioneered this idea, before Touchdown started. As a corporation, if you wanted to start a corporate venture fund, you'd have to go, either take internal people that probably don't have a lot of VC experience, or go hire somebody that has VC experience. We kind of created another option, which is just partner with us. We're going to bring that, and we're going to work with your executives, and that's been very well received, in the market.
Thank you for that explanation, David.
Sure.
Now, what about success stories? I know it's early on, probably too early to talk about those, but can you give any examples of some great investment or collaboration that's happened in your business?
Yeah, I mean, we have a lot of great investments. We've had just last week, I said one of the corporations we work with is Allegion, which is the company that's involved in access control. I mentioned they own the Schley Lock brand. And one of the first investments we made through that fund is a company called OpenPath, which is kind of a next generation access control, primarily for commercial office buildings. There's a partnership that was announced with Allegion to help the company scale. And that company just announced it was acquired by Motorola actually last week. So I think that, I can't speak to Motorola's, reasons for buying the company, but I think that, a partnership with a company like Allegion, certainly gave it a lot of credibility to, and certainly helped, participate in, the growth, revenue growth of the company. So that's a great case study. On the consumer side, one of the investments we did recently was Jackpocket, which is a company, a pretty amazing company. It's a direct-to-consumer lottery company. So instead of going to the convenience store, play on your phone, there's some really cool features that they have. You can, create a pool with your friends. The money will automatically get split up. I mean, all the things that you would do on pen and paper, this automates. So it's, and they're regulated in I don't know the number right now, but several states. So it's, really successful. And one of the corporations we work with is a big media company. So as part of the investment, really working with them on some of the advertising and marketing, because a lot of that has to be done on local level and targeted, especially where the lottery's legalized. And so we've been able to track the effectiveness, and it's helping to grow the company. So you can see two good examples where the corporation, we're not just investing, but identifying partnership opportunities to help scale the business. And again, I think going back to the corporate VC, that's really from the startup perspective, that's really the exciting thing. From the corporation perspective, it's about, accessing innovation, as I mentioned. And, I always feel like if everybody can win, that's a good thing. And so these are some good examples where, Jackpocket's still a private company, it's doing very well, but OpenPath, the other one I mentioned, is completing the exit with Motorola. It was a successful investment.
Great, those are neat examples. So talk to us about the corporate venture capital sector during this pandemic. I know there was a lot of doom and gloom at first, but tell us of how it played out.
Yeah, I think exactly what you said. In March of 2020, oh my God, the world's going to end. And we had a couple of corporations we work with that asked us to pause new investments, which I think is a good, reaction of, we don't know what the environment looks like. Obviously, we weren't sure what the valuation environment was going to look like. And, the last thing you want to do is, invest at the top of the market. So I would say once we saw, in the June, July timeframe, things had settled down. I think everybody started getting comfortable with that we were going to be in this environment for a while. And I remember early on talking to other venture investors saying, we would never invest in a company that we didn't meet in person. Well, that happened for everybody, including ourselves, because there was no other way to conduct business at the time. And anybody that was paused, I would say by the fall, we unpaused and made investments and, seeing the activity growing. And we've launched I think 3 or 4 new funds during the pandemic, actually, new corporate venture funds. So, and I think generally, and I know when we were chatting earlier, we talked about this, but what I saw are digital accelerated, as you'd imagine, during this pandemic. E-commerce increased. obviously Zoom dominated our world, digital, communications, digital transactions, but telemedicine, insurance companies were finally reimbursing the same amount for telemedicine. I think that will persist post the pandemic. So these are things that might have happened 5, 10, 15 years ago, happened immediately. And that forced corporations to say, okay, well, telemedicine is here. We need to go invest in those platforms. E-commerce is here. We need to get our products online. We need to distribute our products. And, it's not just the website, but all of the, third-party logistics and warehousing it's really been a pretty amazing. I've yet to see an industry that we're working with today or we're talking to that hasn't accelerated digital, transformation, digitization from this pandemic. And again, I think a lot of it was moved up, many, many years.
Got it. And what about the outlook for CVC in the short and medium term as we come out of, bumpy road ahead, regardless of how bumpy it is as we come out of this pandemic?
I mean, there's a couple of sides to that question. So I think we're going to see more corporations enter. There's so many companies that are not doing this that should. Anybody who wants to access innovation probably needs a program that's professionally managed, whether it's Touchdown or someone else or internally, whatever, that's sourcing and evaluating and on top of all this. Like, you have to do that. We're in 2021. You have to do that. And there are so many companies. There are more companies that are not doing it than doing it. I think that will change because of all the reasons we've talked about on this conversation. So I think that will continue to grow. Yeah, there'll be some that exit, but I think the amount of new entrants will exceed and even the ones that exit will come back as they do. So there'll be some, peaks and valleys there. And then, I would say the thing that I'm seeing in the market, as I'm sure everyone else is seeing, it's a very competitive venture market. There's more money that's been out there. There's fewer, always a limited amount of, I think more great deals. You see all these exits and public IPOs that are happening. But, and so, I would say it's harder as a corporate VC. You're competing, obviously maybe against other corporations, but also, lots of investors have lots of money. And so as a corporate VC, you have to really start, and there's more pressure to build, some of those examples we talked about. How are you going to add value to the startup? Because if you can't articulate that or convince the startup and it's a great company, they're going to go take money from someone else who can. And so I think we're in I don't see that changing anytime soon. And so I think corporations are very naturally able to articulate the benefits. But if you're new at this and you're still learning, that'll be I feel like I almost should lead a separate, kind of coaching session or training session on how to market yourself to startups, because I think there's need for that, for corporations, certainly.
Yeah, no, I definitely agree with you there. So what about the entrepreneurs and innovators listening in? What advice do you give them in general? Again, we've just come through a pandemic. We're on our way out and things have accelerated. Is the advice the same or is it different for entrepreneurs these days?
I think it's pretty similar. The only thing I would add is there's just so much capital out there and you never know when that's going to dry up. The pace of investing is very high. And so, if I was in the shoes of an entrepreneur, I think you have to have the metrics still that VCs are looking for. But if you have the metrics, there's a good reason to raise now, have the capital in the bank. I was there in 2000, 2001, 2008, 2009. I've been through those cycles where the capital wasn't there again. And you're like, oh my God, I should have raised. I shouldn't have waited for these milestones. And we just don't know what the future is going to like. So I think you have a market where there's a lot of capital, the valuations are good, but you have to have the metrics. And this is where a lot of startups, they talk too early. They don't have the revenue growth. They may not have that first customer yet. Don't have product market fit, and they go out. That's actually the worst thing you can do, because now you've kind of polluted yourself a little bit. Where from the VC's perspective, you kind of labeled as, okay, this company doesn't have traction. Now, certainly if you start doing better and you have those, yes, I think good people will talk to you, but there are going to be some that said, you know what, I looked at that company, it wasn't interesting. I'm moving on to the next set. So you have to be a little bit careful about, creating that poor first impression. But, if you have the milestones, you have the revenue growth, great time to be, I think it's a great time to be an entrepreneur. And we'll talk about my entrepreneur, although it's a little different. It's not really a venture backable company, but I think it's a great time to start a business.
Great. And what about the innovation executives in companies? Any particular advice for those folks? I know you collaborate with them.
Yeah, I think I think one of the things that we're seeing, there was this old adage of, we have to create everything ourselves. Certainly that whole, not invented here mentality. I just think that's the biggest mistake you can make. If you think you can build everything yourself, I just think you're going to fail. And, obviously I'm very biased. My whole career has been set on connecting startups and corporations, but I just believe you have to have a plan around external innovation. You have to have a plan for understanding the startup community. It doesn't necessarily mean, I do think that this investing, mechanism that we've talked about in this conversation is really great for that. But it doesn't have to be that. It could be more business development or commercial relationship oriented. But that's my best advice. And then I would say related to that, making sure you have the right budgets, you have capital to support tests and trials and tests with these companies. Think about these startups need revenue. And so you're not going to get everything for free. So I think that's an important part of that. And so thinking about organizing the corporation to have the budget to, I think it starts with the desire to say, okay, we want to do, commercial pilots and tests with, and ultimately longer relationships with the startup community. But then I think you need to have, the capital and the budget to do that. And then just from a regulatory environment, you have to have that empathy to say, okay, this small company is not the same as the big company. So the same due diligence I would do, the same security assessments, the same contracting, insurance requirements. Just be empathetic to say, what, at this stage, let's change our perspective on the expectations. But as that startup scales, then yes, we should expect, from a compliance or regulatory or whatever. But that again could be an area where the corporation, given the resources, can really help the startup. And I've seen that a lot, especially when it comes to regulated industries, where you can take a startup that probably has a great technology, maybe not understand the regulatory environment, and pair them with the experts at the corporation. That would be a great use case to get that value back from the corporation, to the startup. Just an example.
No, that's great. So before we get to the game, I want to just ask, just share with us just one thing we should all know about corporate venture capital.
Yeah, we talked about it a little bit, but I would say, corporate VC, corporate venture capital could be a great gateway to really start to build that relationship with the corporation. As I mentioned, the way these corporate VCs operate, whether they invest or not, there's a lot of value that these folks can bring to you. They probably really understand the industry. They understand startups, as we talked about. They might have subject matter expertise. So my advice is don't be afraid early on to approach them. But if you're not ready to invest, it's okay to say, what, I'm not ready to invest. I want to get on your radar screen, and I want to see whether or not you think your corporation, could be a good partner with my startup or technology. I think that's great, and I think you can get some of the best value from some of those folks. So I think the message is, use these groups as a gateway, again, to building that relationship with a large corporation. That's the takeaway.
Great advice. All right, so let's break out that game. Let's talk about frequent flyer and how you did this, and just start from the idea.
Show you the back of the box too.
There you go.
Yeah. So, I actually created this game actually a long time ago. So embarrassing or unembarrassing, sometimes that's great ideas take a long time. I think that's a good quote by somebody. I love games. That's very obvious. But I always felt like in real life, the frequent flyer mile is a game. How do you maximize your miles? What bonuses you can get, what routes, how do you get to the platinum levels? That was a game. It was fun. And just at one point, the light clicked and it's like, that would be a great board game, just like it's a game in real life. Why couldn't that be a great, family tabletop and educational, anytime you're, teaching people where cities are located and distances, which the game does. So I created this game, I guess somewhat embarrassingly, certainly happy to admit it, over 15 years ago, created a prototype and just kind of put it in the closet. Eventually, this is before I even had children, eventually had children. They're now 14 and 12. Probably 6 or 7 years ago, I introduced it to them and they loved it and their friends loved it. And they said, when is this going to be in the store? So these were my first kind of beta customers to some extent. And so, some of that just created more motivation to kind of keep, tweaking it. But the biggest issue for me, there's always that one issue, was graphic design. I'm not a graphic designer. I'm not an artist. Far from it. You would never want me designing anything. I'm terrible at PowerPoint. And so I finally found the right partner, a woman named Amy Blaze. Met her. She actually was doing some work for Touchdown on some graphic design, and she's worked for some of our portfolio investments, I believe, as well. And she said her dream was to design a board game growing up. So it was a great match. I needed a designer. She wanted to, and we really hit it off. She loved the game. Her family loved the game, and so we started working on it actually during COVID. I wish we got it out a little earlier, to your point of when the quarantines were happening, but it is what it is, and we just finally kind of got it done last week. So but it's on the market. You can go to frequentflyergame.com. I don't see the chat window here, so if there's a ability to show that, I don't even know if I could share my screen. I can show you guys the website, but you could probably see it on your own.
Okay, I'll send it to them. But tell us tell us that process. All right, I obviously talked about the idea, the designer, but then production and then retail. This is your COVID baby, obviously.
It is.
So
it is very special.
Talk to us about that. Those intricacies I think are really interesting to go through that decision process.
Yep. I interviewed a lot of third-party manufacturers that do board games. I know because of my alma mater, I've always been very partial to Michigan. So we found a company called Delano, Delano in Michigan, and we decided to work with them. I decided not, even though I think the costs are a little lower, but the logistics around working with, Asia or China, I thought would be complicated. And so might have saved us a little money. So we're very, it's an American design game, which is great. So that's wonderful. And, the next thing, obviously, you got to go build a website, which actually work with Amy and her team on, my graphic designer. And then actually the hardest part was actually, how the third party logistics, how are you going to, and so I learned a lot about, how do you do that? And so we ended up working with a company called ShipBob. They've actually raised they just announced based out of Chicago. They just announced, I think, a $200 million venture fundraise. So a lot of D2C companies use them, and they have warehouses all over the US. It's a very tech-enabled system. You basically select, okay, how many games do you want, or units do you want to send? In my case, games. Do you want to send to this warehouse versus that warehouse? So your strategy could be, I want to spread them out, because obviously the closer you are to your consumers, the shipping cost. But they do charge you per location. So there's a bit of a math equation around spread out versus consolidate. I went with the two warehouse approach. I have one in New Jersey, one in Chicago, for the kind of I figured most of my network relationships were kind of East Coast based. So that's kind of why I picked the warehouse in New Jersey. But it's pretty amazing. It's very automated. We use WooCommerce, which is actually a kind of open source e-commerce engine that plugs into WordPress. For what we need, we only sell one product. It's pretty, if you sold lots of products, you might want to look at something like Shopify, but for one product company, it's pretty easy. And it's amazing how automated it is. An order comes through, goes right to the warehouse. They pick it, they pack it, they ship it. It says frequent flyer game on the label. It is amazing how turnkey some of these operations are. So, which is great. Now you have to focus on, on marketing, once you have this done. So my world right now is, it's my night job or my weekend job. So, it's focusing on marketing, and because the game's focused on, airlines and frequent flyer, a lot of the outreach has been to, different message boards, communities, enthusiast group on this area. Ultimately would love to, work with airlines. We'd even customize this for an airline, which I think would be pretty fun. Great way to get subliminal branding to your kind of minor audience, because this game is marketed as eight and older. So those are some kind of fun things I'm working on right now. But that's some of the story on how you kind of launch a board game.
That's really fascinating. Did you have a required minimum of games that you needed to produce? And is that standard for the industry? You have to do a
I think if you go overseas, and again, the quality might not be as good, you could probably get away with a lower. But I wanted if anyone buys it, you'll see very high quality. It's like a denim material. You obviously can't hear it or you can't see it, but you might be able to see through the reflection. So this is a really high quality game. So we had to pre-order a couple thousand to get them to produce it on, for good or for bad. So that's why I'm certainly in sales and marketing mode right now.
Absolutely. And we have a bunch of questions, but before we get to
Sure.
that, I want to understand the thought process, right, of distribution, right? You obviously, it seems like your own website and fulfillment approach, but there's retail, brick and mortar, there's Amazon, there's Shopify, there are other sort of outlets, right? What's the process by which you considered those and other people should consider distribution?
Well, I think you're always going to make the most money when you're fulfilling it and selling yourself, because you're not, cutting in a third party. So that was the goal, which is, especially if the initial outreach was going to be friends and family, let's make sure they transact on this frequentflyergame.com. I think the next step will be Amazon. If you're not on Amazon, you're missing, a huge audience. Obviously, a lot of people have their credit card stored there. They rely on the reviews there. So that's kind of like step two. I wanted to kind of take it one step at a time. And then step three will be, I think, the large box retailers will probably be, longer process, more challenging, but you've got a lot of independent stores. So we're, again, only so much time in the day, especially when it's not your full-time job. That's really hard to run a second company, I have to say. But we'll have, we'll find, there are people that will represent your game or your toy. And so we'll connect with those people, and that will be really interesting for us. But I'm not sure that that's going to, yield, significant values. But right now, it's all going to be leading up for, holiday season. And, I think, as much as this distribution is, I think marketing is more important of, positive reviews, positive feedback. The people like the game. They think it's fun. And you're ultimately getting on, lists for, the holiday season, because obviously that's the biggest time when people are going to buy games is for their, friends and children and loved ones, especially a family game like this, during the holidays. So that's what we're gearing up toward.
Well, thanks for explaining that.
Sure.
That's important to know that sequence, right?
Yeah.
And what about marketing? Obviously, social media, right? You are you have a great network, particularly on LinkedIn, maybe elsewhere. Can you give us sort of pull back the covers on what your social media strategy might be or what you're planning on?
Yeah, I mean, I think initially it was, focused on, my personal network, people that know me. That was really the initial strategy. I mean, I think it's like raising money. You focus on your friends and family first. Kind of like, I'm not raising money, but I'm some ways raising money. When in this case, instead of getting stock, you get a game. So it's kind of the same thing. And then you kind of go for social media. I think the next step is beginning to build followers to those accounts, which is slow. I mean, I think once people play the game, hopefully they'll say, okay, I like it. I want to connect with this brand. And so I think we'll get more and more followers, and then we'll engage them, with, more, video and content and things like that. So that's part of the, high level strategy. I'd be lying to you if there was like a full, 50-page marketing plan. There's absolutely not. There probably should be. But if this was my primary job, there probably would be. But when you're doing this as kind of a fun side, honestly, Jim, my goal was to get this out. It was a bucket list for me that said, I've always been interested in inventing a board game. Ever since I was a child, I was iterating. And to me, it was the accomplishment of, okay, I published a board game. I got it done. You can buy it. You can play it. Yes, I would love for it to take off. I will not, if it does, that's great. But I feel like I've won from what I wanted to get out of this. So
I think that's great. Just as a bucket list, check that off your list. That makes sense. And it's just a great experience, right? I mean, it's a side hustle, right? So you
that's
can
right.
relate to, so many people, millions of people that have side hustles now. It's kind of very common and very popular. So
yeah, I do have a good vision of how I think I could expand both, the sales and marketing, but just the brand overall. But I just think that that's hard to do. I have to be realistic to the fact that it is hard to do on the side. So maybe at some point, again, if I'm seeing the traction momentum, you hire or you bring on other people that can help you. Again, like a startup, you take the idea as far as you can get. Okay, sometimes it's expertise, but it could be time. And I'm not an expert on board games. I've never published a board game before. I'm learning on the fly. So sometimes, just like when you're a startup, you know what you don't, you don't know, and I need to go start seeking people that that know more about me. So that's I'm kind of in that investigation. I felt like talking to those people with like, hey, I have this idea, was not going to be as good as would you like me to send you a copy of the board game? So I feel like I'm a little more credible that I went forward with this than sending them a crappy looking prototype. So that was why another reason I pushed this pretty far.
Right, got it. All right, so let's get to some questions.
Sure.
For funding a pre-MVP moonshot, who should they talk to? I mean, that's a general question, but I think other people have this question as well.
That's a great question. I think if it's pre-MVP, that means it's pre-product, obviously. And I just think that it's too early for sophisticated, venture capitalists. I think, I mean, if you have a relationship, maybe because of that, they'll want to talk to you. Maybe they'd invest as an individual. But from a financing perspective, you want to start with the, kind of friends, families, maybe at some point. I mean, even some of the angel investors, I think sometimes they operate on more like VC investors where they want to see some, proof. If it's really a moonshot, if it solves a problem for a corporation, I wouldn't hesitate, not from an investment perspective, to figure out how to talk to that potential customer and say, this is what I'm working on, and get their product requirements, figure out, it's a little bit of that, maybe before you build the MVP, figure out there's a market, kind of that, customer exploration that a lot of people advise you on. So a lot of my advice would be in that category from a, kind of due diligence perspective. From an investment perspective, I'd focus more on the kind of individual investor who are more likely to take that kind of risk.
Got it. Well, let's just dive down into that for a second, David. For entrepreneurs out there that want you to consider their idea or venture for investment, should they go to the website and see what sectors you guys are focusing in on? Is that the best first step, just so that they know, about Touchdown?
Yeah, I mean, and because we cover so many sectors, I mean, we don't cover every sector. I mean, generally we cover, lots of sectors of the economy. So, I mean, feel free to reach out. I might have someone else on the team kind of respond on behalf. But, if you go to touchdownvc.com /focus, I was gonna say sectors, that'll, that lists, the areas that we're currently focused. And that's the challenge with us is we're changing all the time. We add a new corporate fund, we're managing new sector area. So we're a lot more, what's the right word? Dynamic, fluid, dynamic. Whereas a traditional VC investor may be more static than we are, which I think is good and bad for us. But that's just the reality of the environment we work in. So
got it. Okay, here's a question about your business. What corporate roles do you typically pitch your services to get the business? And then which corporate roles do you typically interact with on an ongoing basis?
That's a great question. I would say this typically falls within corporate strategy somewhere, because this really, a lot of the innovation informs the corporate strategy. So I would say chief strategy officer, head of strategy. Sometimes the company's already organized where there's a head of innovation or even head of external innovation where obviously this could fit. I would say almost always we're engaging somewhere with the CEO and the CFO, obviously not on a day-to-day basis, but they're typically involved in the decision-making process. They hear our pitch, and honestly, if they're not involved, then that may be a bit of a red flag that, this is not, doesn't have that support. And I think this is something that will be more successful with that, executive level support. So that's how I'd answer that question.
Got it. I think we mentioned this earlier, but just the future of this CVC segment is bright. I think you would say that, right? In general, there was a question about, what we think about the future for corporate venture capital.
Yeah, I mean, I think I see more and more case studies where this is really making a difference for both the startup and the corporation. I go back to that. If everybody's winning, this is good. And there's just so many corporations that are not doing this. So I just see this growing because I really believe, I just, in 2021, and you could project that out to whatever year you want, and you can project the fact that technology will become more and more important as it has over the last 5 or 10 years. And you have to say 2025, if you're a corporation and you don't have a program focusing on engaging with startups, you're probably in trouble. You're going to get disrupted. So that's, you're going to be Blockbuster. That's going to become, out innovated by Netflix. I mean, that's, pick any example you want, Kodak, to, any, digital camera company.
And I think maybe that's one of the silver linings of the pandemic, right? If CEOs didn't understand the importance of innovation and staying ahead of the curve and engaging with, new technology during a pandemic that disrupted everything, then they really shouldn't be leading companies, right?
Yeah. I always like to look at the past as a predictor of the future. I'll give you 2 interesting things. So I don't have, obviously, but there's a great chart that basically shows how the average life cycle of a company on the Fortune 500 is basically a big downward slope. So in the 1920s or 30s, you were on the Fortune 500 company, list forever. And now, actually it's S&P 500, not Fortune 500. They're probably pretty correlated though. Now the average length is like 10 or 15 years. And the basic message is if you are not thinking about disrupting yourself, constantly changing, you're going to be off the list. Someone else is going to come on the list. I mean, that's basically, we also did a really other good exercise. I got a lot of questions early on at Touchdown. They said, David, can you have any evidence? My CEO is asking, does this impact my stock price? So if I'm a public company and I do corporate venture, can you show me? And we did some great analysis. We've updated it every year over the past kind of 4 or 5 years. And companies that have a corporate venture fund, they actually outperform the market by up to 40 or 50%. I think the last study we showed 40%, and this was through the pandemic as well. And this goes back to the day they started. So for like a Comcast, it would be 1999, 2000. For Intel, it would be the mid 90s or so. It was not like, and for a company more recently, it would have been recently. And you kind of blend that out and say, like there's evidence that now suggests that public companies that do this outperform their peers or outperform the market that we looked at as a market index. So I think that was really cool. We have a whole blog on it. You could check out it, and I'm happy to send it to anybody that wants to see it.
That's great. I would actually like to see that. All right. Here's a question about corporate ventures that work with startups. Obviously in tech, AI, healthcare. Have you come across corporate venture funds that work with ed tech, arts, entertainment startups?
Yeah, well, actually, on the ed tech side, I would say there's a few actually in New Jersey. I know what's the name of the group that they're in Princeton. They're the ones that operate the SATs. I don't know why I'm blanking on the name.
Yes.
ETS. So they're doing something in this space. There's I know their ACT was at one point doing something in the space. I think on the ed tech side, it tends to be more nonprofit organizations, whether it's on the testing side, some nonprofit colleges, the for-profit education sector. has really consolidated. A lot of the textbook companies have gone digital, so I'm not seeing as much innovation, there. And then I don't see as much on the arts. On the entertainment side, there's a lot. There's a lot of groups affiliated with big media companies, but a lot actually outside the U.S. Like a Bertelsmann, for example, who's very active. We have a partnership with a big TV broadcasting company called TEGNA, which is the one that I was referencing earlier when we were talking about Jackpocket. So we have one within our corporate venture kind of roster.
And if people searched for different investors or venture funds, they can find out what sectors, those investors cover. It's not that hard.
Yeah, and there's a couple of good groups that kind of focus on corporate venture. Probably the most prominent is called Global Corporate Venturing. It's kind of a nonprofit, for-profit. I was saying nonprofit, kind of organization that really tries to organize, and they have a lot of research around who's active across the sectors. But also some of the big companies like the PitchBooks and the Crunchbases, they're trying to aggregate and analyze all that data, CB Insights. So there's a lot of groups that that could really be helpful there. But like anything, start with a Google search. Probably get some great ideas there as well.
Right. All right. So here's a question about the best practice with pitching ideas. Is it better to have a demo of the product, or having an idea? Is having an idea just good enough? I think you can answer that pretty easily. Yeah. Well, he's asking about angel investors. There's resources obviously for those and for
sure.
So what about the pitching? What do you recommend in general as far as
well, there's so many guidelines online of like the perfect pitch. And to me, I always feel like you got to capture someone's attention in the first 2 or 3 minutes. And if you haven't, you lost them. So you want to get right to the point. You want to make sure you very articulately clear what you do. It's amazing how many people can't do that. They're talking and you just don't understand what they do. Like in one sentence, tell me what you do up front. And then you could talk a little bit about, what problem you're solving. How did you get there? I think great companies have great entrepreneur founder stories, problems that are being solved. Maybe it came out of their last company. I like the demo. I think anytime, I like the picture's worth 1,000 words concept. I think it shows that you've iterated more than just having the idea. So I think you get more credit for that. I think the more you could show that this is real, this is happening, there's momentum here. So I would highly recommend that. And I think it might better showcase your vision. Whereas, again, you use the idea, someone might not really understand what you're talking about or what your vision is. And so I absolutely would do that. Maybe be like if you're worried about the demo failing, which obviously is always a risk, you can pre-record a video. There's some cool things you can do to kind of avoid that and say, let me show you a video of me demonstrating the product. That's totally fine. Like if anything, that's just as good as you demonstrating the product, can be just as effective.
Especially now, you're probably going to do it on Zoom anyway.
Yeah, exactly.
There's a question about what advice do you have for an inventor of a patented holiday lighting decor innovation looking to simply license the technology?
Ooh. That's a great question. To me, if you're licensing it, you got to be licensing it to someone who could produce it. So to me, that's a, kind of a business development exercise around, who are the companies that you think would really want to, produce that would be a licensor. Obviously make sure the risk you have there is that, you've a great idea that, maybe they steal, but maybe they go around your patents or your licenses. So that's something that's, I'm not an expert on, but talk to your patent attorney, obviously, about that. But I think you got to go find, it might be better to work with a smaller company, maybe a manufacturer that might, I was talking about for my board game using it, but maybe it's a more off the radar licensee that, is looking to differentiate themselves. And maybe less likely to, kind of go around your patent, maybe has less resources to go around your patent or design it. So that might be something you'd think about, but those would be the best. It's not an area that I'm a, complete expert in. I've not I've not had a patent license personally. I mean, I've done it with startups before, but not as much personal experience there.
She's got a question about, are there any downsides for a startup getting involved with a corporate venture capital arm?
No, it's great to hear from Esther. I think we've spoken before, and you do such a great job covering this community. So thank you. Downsides from for the startup, potentially. I mean, I would say probably less on the VC side and more on the commercial side. So just be careful if the corporation is trying to get some sort of exclusive access or some preferential terms. You have to just understand what you might be giving up. Are there future opportunities? So that would probably less likely come from you might have two different relationships with the corporation. You might have this investment relationship and you might have this kind of commercial partnership. That's more likely to, and they could be tied together, and more likely to come from the partnership organization. I hear a lot from startups that say, well, if I take money from X, it precludes me from Y. I've never seen that. I think that's more of a myth. But that could be a perceived, down it. But I just see, I mean, I know I'm drinking my Kool-Aid. I've been in this industry for a long time, but to me, it's pretty simple. If you've got two investors that you could take money from, and one can, through their company, can help you with, sales or marketing or distribution, and one doesn't have that, I would take the one that has. I don't think it's as complicated. So to me, it's, corporate ventures should be, everything a VC is and more, and but they have to deliver on that. So yeah, again, it's not really downside. Worst case is the same as anyone else that didn't deliver on that. So you didn't do any worse off, but you have the ability to do better, and that's where I think you can, if you really have the effort and do some referencing on that corporate investor or ask them to, like you asked me earlier for some examples, and I provided those to you. Other startups can do the same, for from that perspective.
That is a great answer, David. I'm glad Esther asked that question. I'm glad you answered that.
It's a great question.
That makes a lot of sense. So before we conclude here, I want you to hold up that game one more time and tell people where they can go order from.
So frequent flyer, it's frequentflyergame.com. So frequent flyer with a Y, FLYER, game, GAME.com. Great. And if you're in New Jersey, because our warehouse is in New Jersey, you'll actually get it very quickly. If not, it might take a couple of days, take several days, but available for sale now, $29.99. So please check it out and let me know. Email me your feedback.
Great. I'm so excited about it. I can't wait to play it myself. All right. So David, close out with a quote that you might have that you'd like to share, and then we'll be on our way.
I'll try to squeeze two in if we have time. I was prepared for that question. I have some printouts. So the first one is from my alma mater, University of Michigan. And it says, "Those who stay will be champions." And I think it's got a couple meanings. Certainly in the Michigan context, it's, you have a lot of attrition right now, especially in college, people transferring, people going early to the pros. And, I think the message here is, if you stay, great things will happen. And, probably arguably one of the most famous alumni of Michigan, Tom Brady, almost transferred from Michigan, was a backup quarterback his first 2 years. He actually redshirted his first year, so 3 years with the program as a backup. Became a starter, still split time, persevered, drafted in the 7th round by the New England Patriots in 2000, and now has won more Super Bowls and, as many professional champions as anyone. But I think you think about this in the startup context, which is, and this has got couple different meanings, but sometimes it takes a while. I think that's part of the message here. Don't give up. Sometimes, you need a break. Persistence is really important. I will say though, at some point you should, even though it says those who stay, at some point, if it isn't working out, you probably shouldn't stay anymore as a startup. But, but this is also really good in terms of like, how do you keep your team together? And, a lot of us are in the business of managing people, and If you have, but a lot of it's if you have a down day, there's always bright days to come. And then this is my favorite quote. I actually train people with venture capital on this. And this is from the old school comedian Groucho Marx from the, and my color printer wasn't working, but I don't think you get a color photo of Groucho Marx. He was a black and white actor. And it says, I refuse to join any club that would have me for a member. And the reason I train people on this is from a venture capital perspective, we want to invest in companies that these are companies that there's a lot of momentum. These are deals that lots of people want to get into. And if there's such an easy opportunity, it goes to this Groucho Marx quote. Okay, well, if you would want me in the deal, what's wrong with the deal? Like, what's wrong with the company? And so I kind of use this a little bit of like when you're talking to investors, you want to make sure, like on this other quote, we talked about persistence, but here you got to be careful with persistence because it might feel more like desperation. So there's a fine line between persistence and desperation, but there's the key of creating momentum, and momentum in fundraising is getting a lead investor and getting somebody. And it speaks a little bit this is some of the advice I'm trying to translate for startups is, find your lead investor, go focus on that, go build out the round and try to create that momentum where, if you don't, participate, someone else will. And so, I don't really need your money. If you want to invest, that's great, but I don't need you. And that's what this, and so when we train our team in venture capital, we just say, okay, if they really want to invest so badly, is there something wrong with the company? So it's essential signaling issue that we tell our people to, be careful about. And so, if you're an entrepreneur on the other side of the table, you need to understand that, and I wrote a whole blog on this. So everything I just said is somewhere on the internet.
Great. Well, I love both those quotes. Thanks for sharing, David. Thank you for this great conversation. Thanks for your leadership in the community. We really appreciate it. Thanks for joining us. I hope you enjoyed the show. Please like it, leave a review, and subscribe. See you soon.